Hello dear students, myself CMA Padmaja Buzruk. I will discuss accounts of joint stock companies. Please go to study note number 1, accounting of shares and debentures. I will explain few illustrations. Illustration 19. A company invited the public to subscribe for 1 crore equity shares of 100 each at a premium of rupees 10 per share payable on allotment. So rupees 10 premium is to be payable on allotment. Payments were to be made as follows. On application rupees 20, on allotment rupees 40, on first call rupees 30 and final call rupees 20. Applications were received for 1 crore 30 lakh shares. Applications for 2 lakh shares were rejected and allotment was made proportionately to the remaining applicants. Both the calls were made and all monies were received except the final call on 3 lakh shares which are forfeited after due notice. Latter 2 lakh of the forfeited shares were reissued as fully paid at rupees 85 per share. Pass journal entries. So this question again I have rewritten so that it will be easy for you to understand what has been asked you to do. A company invited the public to subscribe for 1 crore equity shares of 100 each at a premium of 10 per share, and this premium is payable along with allotment. So issue price is 100 face value plus 10 premium 110. This is payable on 20 with application, 40 on allotment, and rupees 10 is payable on allotment, which is securities premium. So this 40 rupees breakup is 30 plus 10. 30 would go to share capital account and 10 would go to securities premium account. On first call 30 and final call 20. If you add this 20 plus 40 plus 30 plus 20, you will get 110. Issue price is 100 plus 10. 10 rupees is premium. Applications were received for 1 crore 30 lakh shares. 30 lakh excess applications they have received. Applications for 20 lakh shares were rejected and allotment was made proportionately to the remaining applicants. 30 lakh extra applications they have received. Out of these 30 lakh extra applications, 20 lakh extra applications they have rejected and refunded the money back which they have received along with these 20 lakh applications. So remaining applications, that means 1 crore 10 lakh applications, they have allotted 1 crore shares. Both the calls were made and all monies were received except the final call on 3 lakh shares which are forfeited after due notice. So whatever was due they have received except on final call. They have not received on 3 lakhs shares. So they have forfeited these 3 lakh shares. Latter 2 lakh of the forfeited shares were reissued as fully paid at rupees 85 per share. Out of 3 lakh forfeited shares, only 2 lakh shares they have reissued at 85 rupees per share as fully paid. We are supposed to pass journal entries. We'll consider rupees in thousand. So hide 3 zeros. Applications received are 1 crore 30 lakhs. If you hide 3 zeros, applications received would be 13,000. Issued capital is 1 crore. If you hide 3 zeros, shares allotted, issued capital would be 10,000. They have rejected 20 lakh applications. If you cancel 3 zeros, 2,000 applications are rejected because we'll consider rupees in thousand. And 1 crore 10 lakh applicants were allotted 1 crore shares. That means 11,000 applicants were allotted 10,000 shares. Rupees in thousand for easy calculations. Applications received 13,000, shares issued 10,000. Amount received with application is 2,60,000, 13,000 into 20, 2,60,000. But application money required on 10,000 shares allotted is 10,000 into 20, 2 lakhs. 2,60,000 minus 2,60,000, they have received excess on application. Now how this excess is to be adjusted, that we'll see now. Excess received on application is 60,000. 2,000 applications are rejected. So 2,000 into 20, 40,000 they have refunded back. So out of 60,000, 40,000 is refunded back, and 60,000 minus 40,000, 20,000 remaining balance which is received excess with application is to be adjusted with allotment. Now see journal entries. Rupees are in thousand. Don't forget to mention on top of amount column rupees in thousand. Bank account debit to equity share application account. They have received 13,000 applications and 20 rupees per application. 13,000 into 20. Equity share application to bank 40,000. On 2,000 applications, they have refunded 20 rupees. 2,000 applications they have rejected. So entry is equity share application to bank 40,000. Equity share application account debit 2,20,000 to equity share capital to equity share allotment. Shares allotted are only 10,000. So 10,000 into 20 would go to capital, and excess after refunding 20,000 gets adjusted towards allotment. We have already seen this. They have received 2,60,000 with application. Out of that 40,000 is refunded. So difference 2,60,000 minus 40,000, 2,20,000. Entry is to be equity share application account debit 2,20,000 to equity share capital 2 lakhs to equity share allotment 20,000. 20,000 adjusted towards allotment, 40,000 is refunded. That is how these entries are to be passed. Next is allotment money due on 10,000 shares allotted. Equity share allotment account debit 10,000 into 40, 4 lakhs to equity share capital 10,000 into 30 to securities premium 10,000 into 10. So due on allotment is 4 lakhs, 10,000 into 40. Out of that 20,000 is already received with application. So remaining amount 4 lakhs minus 20,000 they have received. So bank account debit 3,80,000 to equity share allotment account 3,80,000. So equity share allotment 4 lakhs debit and 4 lakh credit, 3,80,000 when allotment money received, and 20,000 they have already received with application. Next entry is first call due. Equity share first call account debit 3 lakhs to equity share capital 3 lakhs, 10,000 into 30. Whatever was due has been received. So bank account debit to equity share first call 3 lakhs. Equity share first call 1 debit 1 credit, net effect is bank account debit to equity share capital 3 lakhs. Next entry is for final call. Equity share final call to equity share capital, final call due at the rate of 20 on 10,000 shares. So it is 2 lakhs. Have they received whatever was due? No. Final call was not received on 3 lakh shares. We are considering rupees in 1000, so that means final call was not received on 300 shares. So money was received on 10,000 minus 300, that is on 9,700 shares they have received final call. Bank account debit 9,700 into 20, 1,94,000. Calls in arrears account debit 300 into 20. Final call not received on 3 lakh shares, that is on 300 shares, which is 6,000. To equity share final call 2 lakhs. Share final call 1 debit 1 credit. Net effect is bank account debit 1,94,000, calls in arrears account debit 6,000, to equity share capital account 2 lakhs. 300 shares are forfeited. Forfeiture entry, you have to debit capital. Equity share capital account debit 300 into 100. 3 lakh shares are forfeited. Rupees are in 1000, so 300 shares are forfeited. 300 into 100, 30,000. 2 calls in arrears, 300 into 20, 6,000. Just now we have seen final call not received. 2 forfeited shares account, 300 into 80, 24,000. So 80 rupees they have received on 300 shares, which will get transferred to forfeited shares account, and amount of final call which they have not received is to be transferred to calls in arrears account in forfeiture entry. Now if you go to earlier page, 6,000 debited to calls in arrears. Now in forfeiture entry, 6,000 we are crediting to calls in arrears. So calls in arrears account gets closed here. Next entry is reissue of forfeited shares. Out of 3 lakh forfeited shares, 2 lakh shares they have reissued at 85. Rupees are in 1000, so 2 lakhs is 200. Bank account debit 200 into 85, 17,000. Forfeited shares account debit 200 into 15, 3,000. To equity share capital account 20,000. 3,000 is discount on issue of forfeited shares, which gets transferred to forfeited shares account. Face value of share is 100. It is reissued at 85. 100 minus 85, 15 rupees is discount. 300 shares are forfeited and you are having forfeited shares account balance 24,000. But only 200 shares are reissued. So you have to find out proportionate balance in forfeited shares account on 200 shares. So 24,000 divided by 300 multiplied by 200. So that means for 300 shares it is 24,000. For 200 shares how much? It is 16,000. From this 16,000 deduct 3,000 which you have debited to forfeited shares account. 16,000 minus 3,000 is 13,000, which gets transferred to capital reserve. So forfeited shares account debit to capital reserve 13,000. So that means forfeited shares account is not closed, it has some balance, and balance which forfeited shares account is having, that is on 100 forfeited shares which have not been reissued, which is to be shown as forfeited shares account only. It will be shown on the liabilities side of the balance sheet. Now we'll go to next question, illustration 20. X Limited issued 10,000 equity shares of 10 each at a premium of 2 per share, payable rupees 3 on application including premium of rupee 1, 4 on allotment including balance of premium, and balance in call. Public subscribed for 12,000 shares. Excess application money was refunded. One shareholder, Mr. A, holding 50 shares, paid the call money along with allotment. Another Mr. B failed to pay allotment and call on 30 shares. These shares were forfeited after the call and 25 of those were reissued at 9 each. Pass journal entries. See what is given in the question. X Limited issued 10,000 equity shares of 10 each at a premium of 2. So issue price is 10 plus 2, 12. How it is payable? 3 on application including 1 rupee premium. So 2 rupees premium. Out of that 1 they are collecting with application. So this 3 breakup is 2 plus 1. 2 would go to capital, 1 would go to securities premium. 4 on allotment including balance of premium. So balance premium is rupee 1, 2 minus 1 is 1. So on allotment breakup is 3 plus 1. 3 would go to capital, 1 would go to securities premium. And balance in call rupees 5. So there is only one call and they are collecting 5 rupees in call. So 3 plus 4 plus 5 is 12. 10 plus 2 is 12. Issue price is 12. Public subscribed for 12,000 shares. Issued capital is 10,000 whereas applications received are 12,000. They have received excess application. So this is the case of oversubscription. Excess application money was refunded. 2,000 extra applications they have received. So application money received on 2,000 application was refunded back. One shareholder, Mr. A, holding 50 shares, paid the call money along with allotment. Final call, first and final call money on 50 shares they have received with allotment. This is calls in advance. Another Mr. B failed to pay allotment and call on 30 shares. There is one more person who has not paid allotment money as well as first and final call money on 30 shares. So that means allotment money they have received on 10,000 minus 30, 9970 shares. These shares were forfeited after the call and 25 of those were reissued at 9. They have forfeited 30 shares. Out of forfeited 30 shares, they have reissued 25 shares at 9 each. You have been asked to pass journal entries. Now we'll see how it is to be done. First entry is to show application money received. 12,000 applications they have received. 12,000 into 3. Bank to equity share application 36,000. Excess application money refunded. 2,000 into 3, exactly opposite entry. Equity share application account debit to bank 6,000. 36,000 minus 6,000, balance 30,000 they have in application account, which is to be transferred to share capital and securities premium. So equity share application account debit 10,000 into 3, 30,000. To equity share capital 10,000 into 2, to securities premium 10,000 into 1. So this application money 3 is including 1 rupee premium. So 1 rupee per share would go to securities premium account and 2 rupees per share would go to share capital account. Now if you see here, equity share application account is getting closed. So net effect is bank account debit 30,000, to equity share capital account 20,000, to securities premium 10,000. Next is allotment money due. Equity share allotment account debit 10,000 into 4. Allotment has 1 rupee balance premium. So transferred to capital would be 3 and to securities premium would be 1. To equity share capital account 10,000 into 3, 30,000. To securities premium account 10,000 into 1 10,000. This is allotment money due. One person who was having 30 shares failed to pay allotment money. So they have received allotment only on 9970 shares. Bank account debit 9970 into 4 39880. Calls in arrears account debit on 30 shares they have not received allotment 30 into 4 120. To equity share allotment 40,000. Bank account debit to calls in advance. One person having 50 shares has paid first and final call money with allotment. So bank account debit to calls in advance 50 into 5 250. Calls in arrears is wrong. It should be calls in advance. One Mr. A holding 50 shares paid call money along with allotment. So this is calls in advance. Next entry is to show first and final call due on 10,000 shares at 5 rupees per share. Equity share first and final call account debit 50,000 to equity share capital 50,000. They have received on 9920 shares only. So bank account debit 9920 into 5. Out of 10,000 on 30 shares they have not received, it is in arrears, and on 50 shares they have received with allotment. So at the time of first and final call they have received on 10,000 minus 30 minus 50 on 9920 shares. Bank account debit 49,600. Calls in arrears account debit on 30 shares they have not received call money 30 into 5. Calls in advance debit 250 to equity share first and final call 50,000. Now if you go to earlier slide, earlier page, last entry, calls in advance you have credited with 250. Now in this entry you are debiting calls in advance 250. So your calls in advance account gets closed. Now forfeiture of 30 shares. Equity share capital account debit 30 into 10 300. Securities premium account debit 30 into 1 30. Securities premium is 2 rupees. 1 rupee they have already collected with application, so it won't appear in forfeiture entry. But securities premium along with allotment rupee 1 which they have not received, so only 1 rupee will appear in forfeiture entry in securities premium account. So equity share capital account debit 30 into 10 300. Securities premium account debit 30 into 130. To calls in arrears 270. To shares forfeited account 60. Application money received, allotment and call money is not received. Application money excluding premium is 2. So on 30 shares 30 into 2 is 60. You don't have to consider premium here. Securities premium 1 rupee is already received. So 3 rupee application breakup is 2 plus 1. So 30 into 2 they have received. Calls in arrears 120 they have not received on allotment, and 150 they have not received on first and final call, which we had transferred to calls in arrears. See here, first and final call, calls in arrears we have debited 150. Allotment 120 we have debited to calls in arrears. Now 120 plus 150 270 you are crediting to calls in arrears. So your calls in arrears account gets closed here. Out of 30 forfeited shares only 25 shares are reissued. Bank account debit 25 into 9 because they have reissued it at 9 per share. Forfeited shares account debit 25. Face value is 10. Reissue is at 9. So discount is 1. 10 minus 9 is 1, which gets transferred to shares forfeited account. 25 into 1. To equity share capital account 25 into 10. Now this shares forfeited account 60 rupees which you are having, which is on 30 shares. So what will be the amount on 25 shares? So 60 divided by 30 multiplied by 25, you will get 50. 50 minus 25, which is equal to 25, is to be transferred to capital reserve. Shares forfeited account debit to capital reserve 25. So out of 30 forfeited shares, they have reissued only 25 shares. So on 5 shares which they have not reissued, whatever balance they have received will be shown under shares forfeited account, which will be shown on the liabilities side of the balance sheet. Now we'll see next question, question number 21. JB Limited issued 60,000 equity shares of 10 each at a premium of 2.50 per share. The amount payable on application is 4 rupees 50 paisa including premium. So it is 2 plus 2.50. The amount payable on allotment was fixed at 4 per share and an equivalent sum was due on call to be made. Allotment 4, equivalent amount on call is also 4 and application 4.5 including premium. Total applications received were 1,10,000 shares, and after consulting the stock exchange, the following scheme for allotment was decided upon. 3 categories they have decided: A, B and C. Grouping of shares 1 to 100, 101 to 500, over 500. Number of applications received 1200, 175 and 5. Number of shares applied for 70,000, 35,000, 5,000. Number of shares allotted 42,000, 14,000, 4,000. Number of shares applied for, you have to bother about this only. 70,000 plus 35,000 plus 5,000, total is 1,10,000. Those many applications they have received. How many shares are allotted? 42,000 plus 14,000 plus 4,000, which is equal to 60,000. It was decided that excess amount received on applications would be utilized in payment of allotment money and surplus, if any, would be refunded to applicant. So whatever excess money, see here, in all the 3 categories, they have received excess applications. No application is refunded. This is pro rata allotment. Whatever excess they are receiving along with application is to be adjusted for allotment, but after adjusting allotment, if any surplus remains, it would be refunded back. Calls are not to be adjusted against excess application money. Sanjay, who was one of the applicant belonging to category A and who had applied for 100 shares, defaulted in payment of allotment money. Sanjay is from A category. He had applied for 100 shares. So how many shares he would have been allotted, that you have to find out. And he has defaulted in paying allotment money. Vivek, who belonged to category C and who had been allotted 800 shares, failed to pay the call money. Vivek is from C category. What is given about Vivek? He has been allotted 800 shares and he has not paid call money. Their shares were forfeited after respective calls were made and reissued as fully paid for 8 rupees and 6 rupees per share respectively. So they have forfeited all these shares and reissued at 8 rupees and 6 rupees. Show journal entries in the books of company to record the above transaction. Important point to be noted here is Mr. Vivek has been allotted 800 shares is given, whereas Sanjay has been applied for 100 shares is given. So you have to be very careful. He applied for 100 shares. So how many shares he would have been allotted, you have to find out. Whereas in case of Vivek, number of shares allotted to him is given. See this table. Applications received 1,10,000, shares issued 60,000. 3 slots, 3 categories A, B and C. Applications received in first category 70,000, shares allotted 42,000, so ratio is 5:3. 70 is to 42 is 5:3. B category 35,000 applications they have received, 14,000 shares are allotted, so ratio is 35:14, 5:2. In the third category, C category, 5,000 applications are received, 4,000 shares are allotted, so ratio is 5:4. Total number of applications received, if you add this 1,10,000, total number of shares allotted, add these 3, you will get 60,000. What is application money received? That we'll find out first. At the rate of 4 rupees 50 paisa, 70,000 into 4.50, 3,15,000 in category A. 35,000 into 4.50, 1,57,500 in category B. And 5,000 into 4.50, 22,500 in category C. This is what they have received with application. What is the application money required? 42,000 into 4.50, 1,89,000. 14,000 into 4.50, 63,000. 4,000 into 4.50, 18,000. This is required on shares allotted. So what is excess received on application? Difference in these two. 3,15,000 minus 1,89,000. 1,26,000 is excess in category A. 1,57,500 minus 63,000 is 94,500 excess in category B, whereas 22,500 minus 18,000, 4,500 is excess in category C. Shares allotted 60,000. Excess received, just now we have seen on the earlier page, 1,26,000 excess in category A, 94,500 in category B and 4,500 in category C. Now we'll find out what is the allotment money required. At the rate of 4, 42,000 into 4, 1,68,000. 14,000 into 4, 56,000. 4,000 into 4, 16,000. This is allotment money required. In A category, they already have 1,26,000 extra which they have received with application. So balance money 1,68,000 minus 1,26,000, 42,000 shareholders have to pay. Nothing is to be refunded because after adjusting allotment 1,26,000, they have to ask shareholders to pay 42,000. In category B, allotment money required is 56,000, whereas they have excess received 94,500 excess they have. So after adjusting allotment, still 38,500 remains excess, which they will refund back because it is given in the question. Call is not to be adjusted in this. After adjusting allotment, if excess remains, surplus remains, it is to be refunded. In category C, allotment money required is 16,000, whereas excess received on application is 4,500. So 16,000 minus 4,500, 11,500, they will ask shareholders to pay. So nothing remains to be refunded. So once this table is prepared, it is very easy to pass journal entries. Bank account debit to equity share application account 4,95,000 on 1,10,000 applications they have received at the rate of 4.50. Equity share application account debit 4,95,000 to equity share capital 60,000 into 2. Number of shares allotted are 60,000. To securities premium 60,000 into 2.50. Premium is with application. Application is 4.5 including premium. So 2 would go to capital and 2.5 would go to securities premium. of course multiplied by number of shares issued. To bank 38,500, just now we have seen. In category B, after adjusting application and allotment money, still 38,500 remains. It is to be refunded back. To equity share allotment, 1,86,500. 1,26,000 plus 56,000 plus 4,500. 1,26,000. Excess received on application in category A. 56,000 in category B. You should not take this because required on allotment is 56,000 only. Excess difference in these two is refunded back. Just now we have seen. And in category C is 4,500. So 1,26,000 plus 56,000 plus 4,500. 186,500 to allotment. So this is how application money is to be adjusted. Now see here, Sanjay applied for 100 shares. So how many shares he would have been allotted? 60 shares. Sanjay is from category A. Ratio is 5:3. If a person applies for 5 shares, he has been allotted 3 shares. If he is applied for 100 shares, he will get 60 shares. Along with application, he would have paid 100 into 4.50, 450. But what was the money required on application? 60 into 4.50, because only 60 shares are allotted to him, 270. Difference in these two, 450 minus 270, 180, excess he has paid with application. Now what is the amount due on 60 shares which Sanjay was having? 60 into 4, 240. This is allotment money due. But 180 he has already paid extra with application. So net amount due is only 60 from Sanjay on allotment, but he has not paid this new money due on allotment. He has defaulted this. On 60,000 shares at the rate of 4, 2,40,000 is due on allotment. Out of that, received with application is 1,86,500. Just now we have seen this. 1,86,500. So difference in these two, 53,500 is net due on allotment. Have they received whatever was due? No. There is Sanjay's default. He has not paid 60 rupees which was due on allotment. So 53,500 minus 60, 53,440 they have received on allotment. Now we'll see allotment entry. Allotment money due 2,40,000 and allotment money received bank account debit to allotment 53,440. Allotment money due on 60,000 shares at 4, 2,40,000. Equity share allotment to equity share capital. Bank to equity share allotment. Out of 2,40,000, 186,500 is already received with application. 53,500 is due, but 60 is default. So net received is 53,440. So bank account debit to equity share allotment 53,440. Now final call due on 60,000 shares. 60,000 into 4. Equity share final call to equity share capital. Have they received final call on entire 60,000 shares? No. Sanjay's default on 60 shares. Vivek's default on 800 shares. Total default on 860 shares. So they have received final call on 60,000 minus 860 shares. That is 59,140 shares they have received final call at 4, which is 2,36,560. So bank account debit to equity share final call 2,36,560. Entry of forfeiture. Equity share capital account debit 8,600, 860 into 10. They have forfeited 860 shares. 60 shares plus 800 shares. 60 Sanjay, 800 Vivek's. To equity share allotment account 60. Due on allotment by Sanjay. Net due on allotment by Sanjay was 60. To equity share final call 3440. Due on final call by Sanjay and Vivek. So on 860 shares, 4 rupees final call is due 3440. To forfeited shares 5100. This is amount received from Sanjay as well as Vivek. How much they have received from Sanjay? He has applied for 100 shares. So 100 into 4.50, 450 they have received. You have to deduct securities premium from this. 60 shares were allotted. So 60 into 2.50, 150 securities premium. If you deduct from this, net received from Sanjay is 300 and net received from Vivek is 4800. He has not paid 4 rupees per share. So that means he has paid 6 rupees per share. 800 into 6, 4800 he has paid. 4800 plus 300, 5100 they have received from Sanjay and Vivek, which gets transferred to forfeited shares account. Reissue of forfeited shares. All the forfeited shares they have reissued. 60 of Sanjay's share at 8 rupees. So 60 into 8 plus 800 of Vivek share at 6. 800 into 6. 5280. Forfeited shares account debit. This is discount. 10 minus 8 is 2. 10 minus 6 is 4. So 60 into 2 plus 800 into 4. Discount on reissue of forfeited shares gets transferred to forfeited shares account. To equity share capital account 860 into 10. All shares forfeited are reissued. So balance in forfeited shares account gets transferred to capital reserve. Forfeited shares account debit to capital reserve 1780. This is 5100 minus 3320. 5100 is in forfeiture entry. You have transferred 5100 to forfeited shares account, and in reissue entry you have transferred 3320 to forfeited shares account. So difference is 1780, which gets transferred to capital reserve. So in this particular video I have explained you various illustrations. Thank you.